Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. Well, this brings us one step closer to the beast system. Now, what am I talking about? Well, I'm talking about the mark of the beast system that will be set up at the midpoint of the tribulation. We're seeing the foundation being put in place for that today with these various systems that are being built, the infrastructure that's being put in place. But let's take a look at this right here. This is an article from the Substack from back in mid-August titled, "How the Current Global Financial Crisis Leads to Biblical Tyranny," meaning that mark of the beast system. How do we get from where we are today to where we are then in 10 steps? We're seeing many of these initial steps happening right now, right before our eyes. And we're going to talk specifically about one of those steps on a miniature scale has already happened last month. It's not a big deal now because it's on such a small scale, but it should serve as a warning to us of why to be prepared for what's coming and what is certain to happen, because a year and a half ago, it got mentioned that this might happen, and now it has. So let's take a look at this article right here on how we go from where we are now to the mark of the beast system. And we mentioned, guys, Japan is trapped. No matter what they do, the Japanese economy is headed into massive turmoil because they have a currency crisis. They're in the midst of it right now. It's not in the top of the headlines like it was back in early August, but it's still an ongoing crisis, and there's no way out of it. Japan is the fourth largest economy in the world. The second largest economy is China, and China is in the grips of a deflationary spiral right now. Third largest economy is Germany. They are in the midst of a deflationary spiral right now. So the world is heading into a very, very severe economic downturn. I believe it will be the worst since the Great Depression, worse than the Great Financial Crisis 15 years ago. So we're going to see continued volatility, debt hitting its limit, which we're seeing now, limited bank runs, massive government central bank response. I believe we saw the beginnings of this back in September when the Fed cut rates 0.5 point. They cut rates last week another 1/4 point. And of course, might ask the question, well, why are they doing that when supposedly we have record low unemployment, the economy is great, stock market's at an all-time high? Well, they're doing that because they know the banks are in trouble. And as we've looked at in the past, the banks are sitting on over $500 billion in unrealized losses just in the United States. And rising interest rates makes that situation worse. So the Fed went out to cut rates. The problem? Well, rates have actually gone up since they cut them. The central banks are losing control. But this is what I want to focus on right here, a bank bail-in, because ultimately this is going to be the spark that sets off a real crisis globally. So let's read about this if you're not familiar with what a bank bail-in is. And then we're going to talk about, well, just happened. So it says, at some point during their policy response, governments and central banks will make a major miscalculation. Unable to arrest the free fall in global financial markets and corporate bankruptcies, they'll continue to spend and print until public sentiment convinces them to change policy. In the face of intense political pressure to stop, quote, bailing out the banks and Wall Street, they'll do something truly novel. They'll follow the law. What a strange concept. Something they did not do during the 2023 bank failures. So if you remember, spring of 2023, we had the failures of the second, third, and fourth largest bank failures in U.S. history. Those banks should have followed the bail-in laws put in place following the Great Financial Crisis. Instead, they were seen as a systemic risk, and they bypassed that process and agreed to ensure that the FDIC would insure all the deposits, every deposit every dollar above the 250,000 FDIC limit and effectively bailed out all of those depositors that under the law should not have been bailed out. So it says under the Dodd-Frank Wall Street Reform and Protection Act, as well as other post-Great Financial Crisis legislation and regulatory changes, failed banks are supposed to be, quote, bailed in by depositors rather than bailed out by taxpayers. To bail in a bank means depositors are forced to recapitalize the bank with their own deposits. All cash deposits above the FDIC limit are used to rescue the bank and save it from collapse. In exchange, depositors receive equity, an ownership interest in the failed bank. Unfortunately, that equity has a market value much less than what the original cash deposit was worth, basically worthless. It says at some point, expect Fed officials to allow a bank to fail and be bailed in. Any businesses exclusively banking at this bailed-in bank will lose everything above the $250,000 limit, causing many of those businesses to fail. So think if a business has like a $10 million payroll, and then the bank fails, and they lose $9,750,000 of that. Well, now they can't pay their vendors, they can't pay their employees, and they go out of business. And then what sort of ripple effect does that have through the local community, through the business world? It says this will cause an enormous public outcry, and the Fed will quickly reverse its decision, once again promising to guarantee all deposits. But their policy reversal won't matter. The damage will be done. Businesses all over the United States and all over the world will panic. And any individual that has more than $250,000, that single attempt, and that's all it'll take, one attempt to bail in a bank, will spark a panic run on all but the largest banks. We're going to talk about why in just a moment. As individuals and businesses move their cash deposits from the FDIC insured threshold to, or all those above that threshold, to larger, quote, too big to fail banks, such as JP Morgan and Wells Fargo, regional banks and smaller banks will fail en masse. In the end, only a handful of banks will control the overwhelming majority of deposits, and all this will be the result of a contagion sparked by a single bank bail-in. I think I'm exaggerating the extent of the banking crisis. Just remember this, when the bank runs begin, most banks will have nothing in reserve to pay depositors. And so those unrealized losses they're sitting on will become realized losses as they're forced to sell those positions at a loss in order to redeem those requests for deposits, those withdrawals. It says they'll be forced to sell underwater assets at a loss to raise cash. Why do I say they'll have nothing? Well, because in March 2020, the U.S. Federal Reserve lowered the reserve requirements to zero. That's right, zero. Here's the receipt, and this is a snapshot straight from the Federal Reserve website, the Board of Governors of the Federal Reserve. It says, as announced on March 15th, 2020, the board reduced reserve requirement ratios to 0% effective March 26th, 2020. That was supposedly a pandemic-based initiative that still remains in place to this day. You know, one of those temporary government programs that stays forever. What does that mean? It means they're not required to hold any cash on hand. Any deposits. Zero. Zero. This isn't the Bailey Brothers savings and loan where there's some cash in the back, or even that it's this. They have zero on hand, guys. I mean, they may have a few bills when you go to the bank, but trust me, if you go try to withdraw any significant sum of cash from your local bank, it's going to be like pulling teeth. You're going to think it's easier to pass legislation in Congress than to do that, because they don't have it. They have to go out and get it. So guys, a bank bailout now, or a bank bail-in, they're going to be bailing out these institutions as banks begin to fail, just as they did with Silicon Valley Bank, just as they did with Signature Bank, First Republic Bank. But eventually, politically, it'll become unviable to keep bailing these banks out. There's going to be pushback. And so they'll say, okay, we're going to get to a bank that's not so politically connected. Maybe we think we could let this one fail and the whole system won't collapse. And they'll allow that one, once that fails, they'll allow the law to be followed, and that bank will have to be bailed in. And that's when the run on deposits will occur, because anybody who has above that FDIC limit at any institution with any chance whatsoever of failure will be pulling their cash out, transferring those deposits to other institutions in a heartbeat, and it'll cause a bank run on a mass scale. And guys, on a very miniature scale, we saw this happen last month. So let's take a look at this article right here. This is from March 2023. You see March 18th, 2023. So this is in the early first couple of weeks of this crisis that happened in the spring of 2023. It says Treasury Secretary Yellen says not all uninsured deposits will be protected in future bank failures. So here she told the truth for once. That's what a novel idea. It says Treasury Secretary Janet Yellen sought to reassure markets and lawmakers on Thursday that the federal government is committed to protecting U.S. bank deposits following the failure of Silicon Valley Bank and Signature Bank over the weekend. Quote, "Our banking system remains sound and Americans can feel confident their deposits will be there when they need them," she said in testimony before the Senate Finance Committee. Now remember, this is from March 2023. In February of this year, she went back before Congress and said, back when she gave this testimony, she was thinking, the whole thing might fall apart. We're going to have global bank runs. She said, I was really concerned there. We were really sweating it, thinking everything's going to fall apart. So she told the truth after the crisis passed, but in the midst of the crisis, the banking system remained sound. But that's not what she really thought. And frankly, I mean, if she said anything other than that, it probably would have sparked bank runs all across the world. So I don't necessarily know that her lying was wrong in this instance. I don't know, but I'm just telling you, they're going to lie to you and tell you everything's fine right up until the moment where it's very clear to everyone that it's not. It says, under questioning, however, Yellen admitted that not all depositors will be protected over the FDIC insurance limits of $250,000 per customer, as they did for customers of the two failed banks. It says U.S. bank regulators announced a plan Sunday to fully insure all deposits at the two failed banks, including those above the $250,000 limit covered by traditional FDIC insurance. The additional protection will be paid for out of a special fund made up of fees levied on all FDIC-insured institutions. So if you have anything at a bank, well, you've been paying fees since then to bail out these depositors. So that's what that means. This goes on. It says, this will help financial institutions meet the needs of all their depositors, Yellen said. This week's actions demonstrate our resolute commitment to ensure that depositors' savings remain safe. Democrats and Republicans in Congress have largely supported the emergency actions taken in the past week, but with markets recovering somewhat, lawmakers Thursday questioned Yellen about whether backstops for big banks will become a new norm and what that could mean for community lenders. And you couldn't write the script, guys. What we're going to read right here. It says Republican Senator James Lankford of Oklahoma pressed Yellen about how widely the uninsured deposit backdrops will apply across the banking industry. Quote, will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Will they get the same treatment that Silicon Valley Bank just got or Signature Bank just got? Yellen acknowledged they would not. Hey, again, she's telling the truth here. What a novel idea. Uninsured deposits, she said, would only be covered in the event that, quote, a failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences. What does that mean? Well, that means if they're politically connected, if it's a friend of ours who's going to lose cash, then we'll backstop that, right? But who's to judge? And how well can they judge if it's a true systemic risk or not? That's the key point. It says Lankford said the impact of this standard would be that small banks would be less appealing to depositors with more than $250,000, the current FDIC insurance threshold. I'm concerned you're encouraging anyone who has a large deposit at a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, you will be made whole. That's certainly not something we're encouraging, Yellen replied. So now she's back to lying, right? So she told the truth for a brief moment there. Now she's back to lying because that is what they're encouraging. They're saying if you bank with a bank we consider a systemic risk, well, then you'll be bailed out. But if you don't, well, you're going to lose everything. So that's going to encourage people with large deposits to go to those types of preferred banks. So guys, remember up here what he says. James Lankford of Oklahoma, senator from Oklahoma. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured? Yellen says nope. And again, she told the truth there because last month, and we talked about this at the time, we had a bank failure in Oklahoma. Here this article talks about it, talks about what has happened. It says Oklahoma bank fails, in-state peer buys insured deposits. Alleged fraud is believed to be behind the First National Bank of Lindsay's failure. The second U.S. bank collapse this year. The FDIC Deposit Insurance Fund will take roughly a $43 million hit. So a very small bank. This isn't a systemic risk to the economy, but it matters if you're one of the people that was banking with this bank. It says the First National Bank of Lindsay reported total assets of $107.8 million and total deposits of $97.5 million. Yet roughly $7.1 million, again, in the scheme of trillions of deposits, not a big deal. Unless you're one of the depositors who makes up the 7.1 million. It says yet roughly 7.1 million of the bank's deposits exceeded FDIC insurance limits, the agency said. Adding the amount might change as the FDIC gathers more customer information. The FDIC said it would make 50% of uninsured funds available to depositors Monday, adding that the amount could rise as the FDIC sells the failed bank's assets. So as they liquidate this bank, you might get some of those uninsured deposits back. But if that doesn't happen, if they can't recoup all of those uninsured deposits by liquidating the bank, well then whoever had those uninsured deposits, they just lose it. It's gone. Now, for a small bank like this, it's not going to make big news. But what I'm saying is that we're seeing how this has happened, just as Senator Lankford said. Will the small community banks in Oklahoma get the same treatment? Nope, because they're not politically connected. They aren't a systemic risk to the global banking system. But what happens when it's a much larger bank? Now we know if it's JP Morgan, they're going to bail it out. They're going to say all the deposits are insured. But there's somewhere in between, the First National Bank of Lindsay, tiny little bank down here, and JP Morgan all the way up here. There's somewhere in between where they're going to say, let this one fail. We saw something similar to that happen during the Great Financial Crisis when they bailed out other failed institutions or arranged to have others be bought out, such as when Bear Stearns failed, and we're going to sell off all the good assets to JP Morgan and taxpayers will bail out the rest. All of these failed institutions, they bailed things out, kicked the can down the road, and finally they got to Lehman and they said, just let Lehman Brothers fail, right? And then almost immediately after they did that, they said, what have we done? Because it caused this cascade effect of all the institutions that Lehman Brothers owed to say, well, now nobody wants to lend to them because the failure of Lehman Brothers has made all these other institutions insolvent. And that spread like a virus through the global financial system, through the banking system, and threatened to collapse the whole thing until they started announcing, we're going to shore up all these other financial institutions. We're going to bail them all out. We're going to do this, that, and the other. The same thing's going to happen this time. We're going to have some sort of bank, middling bank, one of the smaller, larger banks. I don't know who, but they're going to fail, and they're going to say, this time we're letting the law do its thing because we don't think this one's a systemic risk. And maybe in and of itself it's not. But it's a systemic risk for the people who have uninsured deposits at that bank. And it will destroy a number of businesses, like I said before, that have their payroll, because no business is going to have 50 different banks with $250,000 in an account at each of those 50 banks. Usually they have one, maybe two or three, but once that's going to take down a number of businesses when they have a bail-in like this. And so when that happens, the contagion won't come from that bank owing other banks. It will come from depositors at similar banks saying, what just happened over here? That could happen to us. Let's move all of our cash out of there. Let's move everything to JP Morgan or Wells Fargo or Citi or whoever else they perceive as too big to fail. And it will cause a run. Simultaneously, think of all the bank runs in the Great Depression if they took place in 48 hours. That's what we're going to see. And it's not going to turn out well. So we've seen this happen right now. We've seen this happen here with a small Oklahoma bank. Let that be a warning. Remember what the Bible says, Ecclesiastes chapter 11, verse 2. Divide your investments among many places, for you do not know what risk might lie ahead. The Bible says to diversify. So if you've got everything in one place, let's say you've got $1 million. I don't have $1 million in the bank. But if I did, I'd divide it up amongst many places like the Bible says to do, because we don't know what's going to happen. We don't know what's right around the corner. But guys, when this happens, it quickly leads to, again, this bank bail-in will lead to this cascade of bank runs. Something big blows up, and that's when we have our bank holiday that we've been talking about, where the credit markets freeze, everything's shut down for a week, 2 weeks, 3 weeks, whatever it may be. And then they'll have to roll out a new system that everybody has faith in and believes in order to get things back up and running. And they're already putting the pieces in place right now for that through central bank digital currency, tokenized assets, digital IDs. And guys, those three things that we just mentioned right there, they're indistinguishable in capability and function from the mark of the beast system. Now, it won't be the mark of the beast system So the mark of the beast system requires, well, the mark that requires the beast, and we're not in the tribulation. The Antichrist is not in power implementing that with the false prophet. So that is not what's going to happen immediately after this, but this will set the stage for it. It'll put those things in place so that when the Antichrist and the false prophet decide to roll out the mark of the beast system, everything is in place for that to happen. And we're on the cusp of seeing all of these steps fall into place that lead us from where we are today to this new system being put in place. And once that new system's put in place, of course, they'll make it mandatory. Cash will go away. And then the mark of the beast system can be rolled out. So guys, all of this tells us how close we are to the tribulation period. It's not something 100 years from now. It's just not. We're seeing all the pieces put in place right now. When does all of this happen exactly? I don't know. But Jesus said, when you begin to see all these things take place, meaning the things he talked about in regard to the end of the age and his second coming at the end of the 7-year tribulation, meaning all the end times events the prophets talked about, when you begin to see all these things take place, know that I'm right at the door. Your salvation draws near. Guys, he didn't say, well, when you see that, maybe I'll come back, maybe I won't, or maybe a few centuries will go by. No, he said, when you begin to see those things, know that I'm right at the door. Guys, this is just one thing we're seeing of many emerging and converging signs Jesus and the prophets said to look for that are converging in our day and time, and they indicate how near we are to the 7-year tribulation period in this mark of the beast system. And guys, that should give you hope and joy, because the Bible, I believe, teaches that the rapture of the church takes place before that 7-year tribulation. So if we're close, getting very close to the tribulation period, that also means that while the rapture could happen at any time, it could happen in the next minute. It's going to happen sometime between right now and the beginning of that tribulation period. And the tribulation period is near, so near we can see it, the stage being set for it. That tells us the rapture of the church is even closer. So guys, be filled with hope and joy, but don't let up. Run the race before you. Make sure that you are always prepared to give a reason for the hope you have in Jesus Christ, to spread the gospel, the good news of Jesus, to as many people as possible. So let me know what you think. Leave your comments below. Make sure to hit the like, share, subscribe, and restack buttons. God willing, I will see you on Wednesday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to visit my Substack at brittgillette.substack.com. There you'll find my latest videos and articles, as well as notes, where I share the latest news headlines, the articles I'm reading, and the videos I'm watching. Subscribe for free, and each new post on Substack will be sent directly to your email. Just scroll to the bottom of the homepage and hit the subscribe button. As an added bonus, your first welcome email will include a link to a copy of my free ebook, 7 Signs of the End Times. Also, make sure to check out all of my books. Just look up Britt Gillette on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.